Good morning. Welcome to IG's early morning call. It's Thursday, the 9th of February. Let's take a look at the headlines as you await the start of today's European session, which looks like it could well be an upside beginning to the session in today's trade. So far as the FTSE 100 is concerned, we continue to bubble just below recent record highs. We've got a ton of earnings this morning coming out across the markets in Europe. It's going to be a really great start to watch for in terms of some of the individual stock stories. In London, we've got AstraZeneca, Unilever, British American Tobacco. We've got the house builders as well out, as well in the UK. In Germany, watching out for Siemens last night, beating forecasts in the first quarter, and it's raised its guidance for 2023. And in the US, we got a positive response last night from a restructuring plan from Walt Disney. That stock was up 5%, all sessions on the IG platform. Take a look at what's happening in volatility. We've got to bounce off this recent low that we've seen back on Thursday last week. It was a positive session then, and we've seen that positivity continue. Yesterday, we saw an intraday print, the highest we've seen since the 25th of January, meaning there's a little bit of risk taken off the table. But if you look at some of these markets where we've seen record highs, I'm talking about London particularly, yesterday we saw another new all-time record high, 79.35.4, registered on the IG platform. But then came the pullback. We did end not too far away from the start yesterday. You can see, in fact, it was a red candle on the 24-hour markets yesterday. But today we've got a strong start. Indeed, if we close at these levels where we're at the moment at 79.07, we will be at another record closing high. We'll have to see how the day develops, but we've got a ton of earnings, as I said, out, which could well give some sort of a direction underneath the covers. German DAX, you can see very close to the highs that we saw back on the 2nd of February. Don't forget, of course, we got this move up in the market at the moment. And as of that day, we were at the highest print we've seen in that market since February last year. So we are at 1 year highs pretty much for the German DAX, up at 15,514 at the moment, looking for a stronger start there as well. Siemens taking the headlines in terms of some of the individual stock movers likely at the start there today. Yesterday was a negative day for the French markets. I think actually, if you look at the French CAC 40, it was, I think, in amongst the worst performers in the European session. But in fact, look at the rebound today at 71.67, not too far away from those highs we saw last week on the French CAC 40. Quick update on where we were overnight in the Asia Pacific markets. We saw declines on the Nikkei 225, but only by a small margin. ASX 200, a little bit more pressure. Hang Seng Stock Index recovering in the session today. It's been an interesting couple of weeks since we've seen that market return from the Lunar New Year. Not really getting any firm direction. One day's up, one day's down. Today we're up 1.4%. Still 90 minutes of the trading day left to go on the cash session in Hong Kong. Wall Street closed last night. Just a quick reminder as to where things ended out the session yesterday. We saw a 3% rise when all was said and done for Uber after its earnings out yesterday, but that didn't help tech stocks yesterday, down 1.68% on the Nasdaq, but slightly better performance if you steered your attention away from technology stocks. I want to show you the Nasdaq because that drop that we saw yesterday wasn't as big as the rise that we saw on the previous day, so it wasn't an engulfing candle or anything. Today we got a gain in the 24-hour markets, and we are, as I said, looking and digesting some of the news out late last night. The real headline coming through from Disney, which I'll cover in just a few moments' time. But that stock was up 5%, so that should, in theory, give a little bit of a positive response to the movement today for some of the stock markets. Yesterday, a down day, as we've just seen on the Dow Industrials. The Dow Industrials. We're currently up at 34,071 of the 24-hour markets on the IG platform. Nothing stunning, but just a little bit of a reaction to the negativity, I think, that we saw yesterday. We've seen the early release this morning of German CPI. We normally get this data out around about lunchtime, but in fact, it's come out this morning. German CPI consumer prices edging higher once again to 8.7% for the month of January year on year, from a 4-month low of 8.6%. This continues to be a headache for the European Central Bank, which continues to raise interest rates. We saw 50 basis points just recently. It's widely expected we'll get that repeated at the next meeting, and thereafter we'll have to see where things go. A technical issue made it necessary to postpone the release of the preliminary CPI data, but this data out this morning, as I say, give you an insight into the initial readings on the German inflation data showing edging higher. 1:30 p.m. today, we get initial jobless claims in the States. The market anticipates 190,000 new claimants in the market. I want to show you what's happening on the foreign exchange markets for the euro dollar. This is the first day that we've seen gains. We saw a long-legged doji candle back on the 7th of Feb, Tuesday this week, where we saw that sort of indecision as to where we were going to go. And since then, it has, broadly speaking, been flatlining. But we are up today at 107.36. I think in part, I guess, if we look perhaps possibly maybe at a 10-minute candle, we might be able to get an insight into what happened on the release of that German data. You can see initially the euro fell, but since then we've seen it rise. So the bottom line is we're not too far away from where we were just before that data came out on the German inflation print. We've been supported by the 50-period moving average here on the euro-dollar trade. It's not a significant simple moving average for support, but nonetheless, we're riding that little bit of a wave that we've got there, despite the fact we've got the MACD continuing to point down, indicating momentum seems to be favouring those that want to go short on this market. How much further short there is on the way down, I don't know. We'll have to see just what happens with the dollar trade. As I said, we got that data out today for the weekly jobless claims. It's not a big number. This week is not massive in terms of economic data. And as you can see at the moment, we're just beginning to tread sideways. While we're talking about the currency markets, do want to take a look at what's happening with sterling. Third day in a row of gains for sterling at 121. So that's where things are for the pound. Now, the Royal Institution of Chartered Surveyors says Britain's housing market suffered the most widespread price falls since 2009 in January, as the run of interest rate increases over the past year has been weighing on would-be buyers choosing not to come into the market. The RICS house price balance, now this measures the gap between the percentage of surveyors seeing rises and falls in house prices, fell to a negative 47. This is the lowest print we've seen since April 2009. That's gone down from a negative 42 in the month of December. Now, Rick says all the indicators point to a further slowdown in the housing market in the coming months as borrowing costs have risen sharply and household incomes are squeezed by the cost of living crisis. I think one of the areas to watch out for is the FTSE 350 Household Home Construction Index. Now, this has seen a 44.4% rise from the lows we had back in October last year. So that has been a big recovery. But if you look at the wider picture, we had a spectacular loss of value from the highs we saw back on the 19th of April 2021, where we lost more than half of the value down to the lows we had back in October 2022. So this is just a small retracement of what has been a widespread sellout of this sector. This sector includes those large house builders like Barratt Developments, Taylor Wimpey. Today, we've seen news coming out from Bellway and also Redrow, showing a little bit of an upside, but it's mostly social housing, which is doing some of the really heavy lifting. But I think all this is concerned with what's happening in the foreign exchange markets. With this 121 print for sterling against the US dollar, the Bank of England's been raising interest rates. It did so for the 10th time last week to 4%, but said inflation is likely to have peaked and a recession will be less severe than previously feared. Now, this is good news for the housing sector, but so far as the RICS survey says today, all indicators point to a further slowdown in the housing market in the coming months as those borrowing costs continue to add pressure to the sector. Now, talking about the release of Redrow and Bellway, just to quickly update you on what's been happening. First half numbers out from Redrow this morning. Revenue similar to the record first half we saw last year, just over £1 billion sterling. Operating margins down 20 basis points. This could form a little bit of a negativity to the start of today's trade in shares of the company. Profit before tax down 2.5%. Interim dividend maintained at 10 pence. Air source heat pumps and underfloor heating on ground floor will in future be standard in detached homes on new developments. Now, I think this ought to be an absolute given. Every single house ought to have all these renewable features in them. Why not put solar panels in every single house? There's not enough being done in this sector. The reason why? It costs too much. People aren't prepared to pay the price, and as a result of that, we're not getting the renewables through. The outlook revenue down from 2.1 billion to 2.05 billion for this current year. I'm not completely convinced this is an uphill story for the share price. Redrow yesterday, seeing the highest print we've seen in the market since the 18th of August last year. If you are short on this, your stock would go above that high point we saw yesterday, so around about the 565 pence level. 545 is where we open today. That's not a trade recommendation, but I'm just looking at this in the context of what Redrow is saying as a softening of the housing market. Let's stay on this sector because I wanted to bring up a chart as well of Bellway. Bellway is a ticker symbol
BWY. Bellway has come through with numbers for the first half ending the 31st of January this year, showing signs of strain. While record completions of 5,695 homes was up 1 on last year, it was a record 1.6% increase in the average selling price to 316,900. 1.6% increase. We got inflation at 10%. That's way below 10%. So people talking about house prices holding up, they're not. They are suffering at the hands of inflation. Inflation's racing away. House prices are not moving. So technically speaking, it's costing less and less to get a house on the market. And in fact, what's been happening is that, of course, there's been this rise in building costs, building material costs and labor costs, which means it's eating into these margins of these house builders. The company says elevated mortgage rates and the end of the Help to Buy have contributed to a 43.8% drop in private reservations to 91 per week. This doesn't look like a good report to me. The stock will open at 2,200 when trade gets underway at the top of the hour. Steering away from the housing sector, AstraZeneca fourth quarter adjusted EPS at $1.38, revenues of $11.2 billion. For AstraZeneca Chief Executive Pascal Soriot says that 2022 was a year of continued strong company performance and the execution of our long-term growth strategy. AstraZeneca is one of these companies that's really benefited from this move into some of these defensive stocks. Yet recently, we've seen a record high in the stock at 118.90. That was the high we saw back on the 10th of January. Since then, there's been a little bit of air taken out of the tires. I've drawn a fib on here. In the last few days, we've been very close to this 76.4% retracement. We've seen a rise today. I haven't looked through the detail of these. This is a 48-page report this morning from AstraZeneca. But I think broadly speaking, it spins a positive story. How the stock will react remains to be seen. But yesterday we closed up above the 100-period moving average at 107.49. If you're long on this, stock goes below recent price action. Let's stay on the charts and just quickly run through a couple of others that I think are worth looking at. One particular, Unilever, will open at 41.02 today, reporting quarterly underlying sales growth above expectations. This looks like a positive report to me. Opening at 41.02, if you're long on this, stock goes below the 50-period moving average down here about 40.50. Underlying sales up 9.2% in the fourth quarter, beating company provided analyst estimates of an 8.2% increase. As I said, if you're long on this, stock goes underneath the 50-period moving average for a potential rise in the stock. I want to stay on the charts because British American Tobacco, you can see this downward facing channel we've been at recently. It's hit the underside of that. Cigarette volumes flat, non-combustibles up 7.7%, revenue adjusted up 7%, revenue from new categories up 40%. You get the picture, moving away from cigarettes, moving away from tobacco, moving away from what was the bad part of the company, if you look at it that way. It was the most profitable for so many years. British American Tobacco finding new markets in non-combustibles, and it's doing so well. Dividend up 6%, earnings per share up 12.9%. Looks like a positive story to me. We'll have to see how things open. After 3 days of losses, the stock will open at 30.87. Let's move on to what's been happening into some of the continental markets. Late last night, we saw what appeared to be a really good report, really strong report out from the German industrial giant Siemens. It reported better than expected quarterly results, and it raised its full year sales guidance as well, boosted by a strong start to its 2023 fiscal year. These are the numbers that we saw out last night. The builder of trains and industrial software reported profit at its industrial business of 2.7 billion euros in the fiscal first quarter, beating forecast of 2.5 billion. Revenue up 8% to 18.1 billion. Siemens now says it expects full year revenue growth of 7% to 10%. Previously, that had been between 6 to 9. So I think whichever way you cut this, I think we're looking at a potentially stronger start. The Siemens chart was interesting because over the last 3 days, you can see here we've seen 3 red candles. I think technically, when you get 3 red candles like that, some of the more skeptical people begin to realize, skeptical of the technical analysis, begin to realize this is a trend. But I think this is a trend that could well be reversed today. We're opening at 139.67, and things looking good for Siemens at the start today. Things not looking so good for Credit Suisse, reporting its worst annual loss since 2008, a global financial crisis. This is a company in all sorts of problems. Credit Suisse posting fully a pre-tax loss of 1.3 billion Swiss francs, beating estimates, it has to be said, of 3.4 billion.
but analysts have such a negative view on this company. Revenue is short of estimates, 14.92 billion Swiss francs. You've only got to look at the direction of travel. In terms of the share price, since the highs we had back on the 26th of Feb 2021, it's been pretty much a direction of travel in one direction. It's been pretty much a straight line. 325.9 is where we opened this morning. I can't see anything here, which gives me any reason to celebrate Credit Suisse. Wanted to stay on the charts, just want to quickly run through another couple of companies. I wanted to look at my chart here for Credit Agricole. It looks like I don't have it here, but let me just quickly dial that in to show you what's happening with the French bank. It's been on a real rip recently, and we closed up near the recent highs at 1,121. It's reported a 9% rise in net income of 1.56 billion euros for the fourth quarter, revenue up 2.7%, per dividend of just over €1 per share. And I think on the whole, French bank's not been too bad recently. We saw SocGen yesterday, BNP Paribas last week. I think it was the other way around, actually, but we've seen a pretty good run on French banks recently, and I think this number out today from Credit Agricole goes to say pretty much the same sort of thing. After the close of business last night on Wednesday, we saw a release from Disney, Walt Disney rising 5% in the market, all sessions on the IG platform, after posting better than expected numbers and revenue as well as restructuring. Disney reported adjusted earnings per share of 99 cents, ahead of the average estimate of 79. Revenue hitting 23.51 billion, ahead of Wall Street estimates of 23.4. Now, Walt Disney announcing a restructuring plan as well, the third one in 5 years. 7,000 jobs will go. That's about 3.6% of the group's workforce, in an effort to save $5.5 billion in costs and make its streaming business more profitable. If we take a look at the share price chart, you can quite clearly see on the right-hand side here, we were well off the highs yesterday. And indeed, at one point yesterday, we hit levels not seen since the 17th of August, then came the pullback. But it did end up, as I said, 5% or sessions on the IG platform last night. Under a plan to cut costs and return power to creative executives, the company says it will restructure into 3 segments: an entertainment unit that encompasses film, television and streaming, a sports-focused ESPN unit, and Disney Parks, experiences and products. Bob Iger, the incoming chief executive, he's returned to the business. This was the vertical dotted line here, which I drew a few days ago, which shows when Bob Iger came back to the business. He is focusing on the streaming business. It remains Disney's top priority. Walt Disney also vowed to reinstate a dividend for shareholders, according to the chief financial officer last night, Christine McCarthy. Said the initial dividend would likely be a small fraction of the pre-COVID level, with a plan to increase it over time. Things looking good for Disney. It'll open again at 9 o'clock this morning on the IG platform, all sessions. Now, after the Uber number came out yesterday, where we saw a 3% rise in shares overall for Uber, we saw Lyft last night. I beg your pardon, it reports earnings tonight. My apologies. Fourth quarter numbers, earnings per share 15 cents on revenues of 1.15 billion. I want to show you first of all what happened with Uber yesterday, because this was the ride share app breaking new higher highs yesterday at one point at levels not seen since the 11th of Feb 2022, so 1 year highs. Then came a little bit of a pullback at the end, but it was a positive end to the trading session. This is another all sessions stocks. You can trade this when it reports earnings after the bell tonight. It saw a negative swing yesterday at 17.06. We're looking for that to report after the bell tonight. PayPal Holdings is scheduled to report its fourth quarter numbers after the closing bell. Analysts forecasting earnings of $1.20 on revenues of 7.39 billion. Again, another company which is all sessions on the IG platform. I want to show you the share price chart of PayPal. Yesterday, fairly hefty declines. The PayPal in the third quarter, earnings and revenue topped expectations, but the fourth quarter guidance was below estimates. The company forecast, again, will be investors' main forecast, especially new customer additions. In the first 9 months of 2022, PayPal reported new net active accounts of 5.7 million and forecast 3 to 4 million new active accounts for the fourth quarter. So these are numbers to watch out for tonight after the bell. That reports after Wall Street closes, and you can trade this again on the IG platform. Other earnings, just to quickly run through the rest of them. After British American Tobacco this morning, we have Philip Morris International, also PepsiCo and AbbVie out with numbers.
Let's shift into commodities. US crude oil stocks last week rising to their highest level since June 2021, according to the EIA yesterday. Crude inventories rising by 2.4 million barrels. This means technically there's more oil in the market overall. I want to show you what's happening with the price of oil. Yesterday was the third day in a row of gains. Today, that's come to an abrupt halt at 78.56. So watching what happens there in the oil markets. Just want to run through a couple of other stocks, a couple of other areas of the market, I should say. Fourth day in a row of gains. They're only marginal compared to the losses that we saw in gold at the back end of last week when we saw that strengthening dollar come through with the better than expected jobs data. Since then, we've seen people buy back into the lows for the price of gold. And one of the areas of the market we've been following, it's been a little bit of a joke here at IG in as much as it's not massively traded. But look, we're here to indicate what goes on in the markets. When we see things happen, we want to report on them. That's our inclination. Just wanted to highlight this, that we're ever so close to $250 for the price of New York orange juice. And this has had a tremendous run from the lows we had just over the 201 level. We saw lows strike back on the 25th of January. It's been an incredible rise, almost up to $250. New York orange juice continues to add weight as we see things continue. There's a poor harvest, there's disease amongst crops, there's the Hurricane Ian decimating crops. The winner out of this, definitely Brazil. That's where one of the biggest and most profitable areas of orange juice is in the world. That's it. Got 9 minutes to go before the start of the day's European session. Do watch out for a whole raft of companies across many markets this morning. Could give us a steer. But at the moment, at least, we are looking for a stronger start to the European session. Join us again at 10:30. Starting the market.